Welcome to the deep dive. You know, the crypto world moves so fast, it's tough to keep track of what really counts.
It really is. So much noise out there.
Exactly. So today, our mission is pretty straightforward. Let's just cut through that noise and pull out the crucial stuff.
Sounds good. And we're working from Crypto News today. The April 30th edition from Coinedia on Binance Square should give us a solid base.
Perfect. And we've got some interesting ground to cover. First up, this whole thing with Telegram tokenizing its bonds. That could be big.
Yeah, definitely worth unpacking.
Then we'll look at Bitcoin's price it's been climbing, but there's a counter-argument about risks we need to hear.
Right, the Bitwise perspective.
Uh-huh. And then something a bit more long-term, but maybe quite serious, the quantum computing threat.
Yeah, the potential impact there is significant.
And finally, just a quick look at where Bitcoin, Ethereum, and XRP are sitting, price-wise. So the goal for you listening is to walk away with a clearer picture of the key signals, the opportunities, and maybe the hurdles without feeling totally swamped. Ready to jump in?
Let's do it. Starting with Libre and those Telegram bonds.
Yeah, tell us about that. Libre's tokenizing.
Yeah.
What was it, $500 million worth?
That's the number. $500 million of Telegram's bonds, and they're putting them onto the TON blockchain.
Okay. And it's under this banner, the Telegram Bond Fund, TBF.
Yeah. TBF, exactly. Has a bit of a ring to it, like you said.
Now, who's this actually for? It's not for everyday folks hopping on an exchange, right?
No, not at this stage. It's aimed squarely at accredited investors. They're talking about offering institutional-grade yields.
Right, so they're chasing the big money, the established players.
Precisely. And look who's backing it. You've got names like Brevin Howard, Nomura's Laser Digital involved.
Okay, those are serious names from traditional finance. That definitely lends it some weight.
It does, but what's maybe even more interesting isn't just holding the tokenized bond, it's what they want to do with it.
Ah, okay. So, beyond just an investment, what's the plan?
The goal is utility. They want these tokenized bonds to be usable as collateral within DeFi.
Oh, interesting. So taking this, like, traditional, maybe less liquid asset.
Exactly, and making it active collateral in decentralized finance protocols. Lending, borrowing, that sort of thing.
That really speaks to that whole trend we keep hearing about tokenizing real-world assets, RWAs.
It's a prime example. Taking something tangible, or at least traditionally off-chain like a bond, and bringing it onto the blockchain.
And the potential there is huge, right? Even if it starts with institutions, you could see a future where maybe individuals could trade fractions of these things easily.
Well, that's the long-term vision for RWAs, potentially democratizing access. Imagine buying a tiny slice of a corporate bond through a DeFi app. We're not there yet with this fund, but it points that way.
It really feels like a bridge being built between TradFi and crypto. And for Telegram, such a big platform to be involved, what do you think this signals, bigger picture, about where finance might be headed?
Well, it strongly suggests that the efficiencies and, frankly, the new possibilities offered by blockchain are being recognized more broadly, making assets like bonds more liquid, more composable within DeFi that could unlock a lot of value.
Yeah, definitely something to watch. Okay, let's pivot. Bitcoin's price action.
Right. We saw that move up towards $96,000. That was a 2-month high, about a 1% rise on the day mentioned.
And it wasn't just Bitcoin, was it? The wider market seemed pretty buoyant. Stocks, too, despite some economic worries floating around.
Yeah, generally positive sentiment. And Bitcoin Cash, notably, had a really strong surge, over 6%.
So on the surface, things look pretty green, but then we have this counterpoint from Jeff Park at Bitwise.
Exactly, and it's an important one. He's basically saying, hold on, maybe the market is getting a bit ahead of itself.
How so? What's he pointing to?
He's warning that the market might be, let's say, ignoring or at least underappreciating some deeper risks, specifically tied to U.S. creditworthiness. And also the long-term fight out from what's sometimes called dollar weaponization. You know, the U.S. using the dollar's global role for political leverage.
Right, the idea that using the dollar that way could have unintended consequences down the line for its own stability and for markets relying on it.
Precisely. And Park's assessment is pretty blunt. He calls the current optimism mispriced.
Mispriced. Wow. So he thinks investors aren't factoring in these big systemic risks properly.
That seems to be the argument, that the current positive feeling might not fully align with these underlying economic realities or potential future shocks.
Okay, so for someone listening trying to make sense of this,
Yeah.
how do you balance that? You see prices going up, maybe your portfolio looks good, but then you hear these warnings about the foundations being shaky.
It's tricky, isn't it? It really underscores why you can't just look at price charts in isolation. You have to consider the macro environment, the bigger picture.
Yeah, geopolitics, central bank policies, national debt,
Yeah.
it all feeds in, even to crypto.
Absolutely. Crypto doesn't exist in a vacuum. These broader financial and economic currents matter a lot.
Okay, heavy stuff. Let's shift gears again to something potentially even heavier in the long run, quantum computing.
Ah, yes. The hidden quantum threat, as Alex Thorne from Galaxy Digital puts it.
And he's saying the risk is greater than most realize. That sounds alarming.
It is. And it's not just the theoretical, someday quantum computers will break encryption. Thorne's point is also that developing the solutions, a quantum-resistant cryptography, is proving harder than maybe people thought.
Harder to develop or harder to implement across all the different cryptos.
Both, potentially. Finding robust algorithms is one thing, but then getting the entire ecosystem, all these different blockchains, wallets, exchanges to upgrade in time, that's a massive coordination challenge.
And this isn't just a Bitcoin problem, right? He made that clear.
No, absolutely not. It affects, and I quote, all cryptocurrencies using public key cryptography, which is, well, pretty much all of them that matter.
So Bitcoin, Ethereum, everything down the line that relies on that public-private key setup.
Exactly. Your digital signature, the thing that proves you own your coins, relies on math that current computers can't break, but sufficiently powerful quantum computers theoretically could.
And Thorne's warning is that an attack, if it happens, might not be gradual. It could be sudden.
Yeah, that's the chilling part. He suggests it could be abrupt and calls it a potential national security issue. Imagine waking up one day and finding vast amounts of crypto are vulnerable or even compromised.
Okay, that's quite the scenario. So just to hammer it home, every crypto is at risk. It's fundamental. What does this mean for the future then? Is the industry racing against time?
In a sense, yes. There's a lot of brilliant work being done on post-quantum cryptography, but the threat is real, even if it seems distant. It means security research and eventually large-scale upgrades have to be a top priority for the entire space. It's an existential consideration, really.
Definitely adds a layer of long-term uncertainty. Okay, let's bring it back to the present, the immediate price picture. What's the analysis saying now?
So Bitcoin was seen stabilizing around $95,000.
Okay, holding that level.
Right. And the analysis suggested a potential rally, maybe toward $100,000, but that depends on breaking key resistance levels.
Always an if, isn't there? What about Ethereum?
Ethereum was hovering near $1,800. The potential target mentioned was $2,000, but again, contingent on breaking out above a specific level, $1,861 in this case.
Got it. And XRP?
XRP was noted as holding support at $2.20. If momentum picks up, the analysis saw a possible climb to $3.
And the general sentiment across these three seemed bullish. Mentioned something about RSI levels.
Yeah, the analysis pointed to bullish signs for all three, backed by healthy RSI levels. RSI, the relative strength index, basically measures price momentum. Healthy levels often suggest there's room for prices to keep moving up without being immediately overbought.
But there's always a but. What was the caveat?
The crucial caveat. Failure to hold key supports could lead to short-term pullbacks. This is standard, but important. If buyers don't step in at those support levels, $95K for BTC, $1,800 for ETH, $2.20 for XRP roughly, prices could drop back down.
Right. So for anyone looking at this kind of analysis, how do you use it responsibly? It gives you potential upsides, but you absolutely have to factor in that downside risk.
Exactly. Technical analysis can be a useful tool for identifying potential trends, key price levels, entry or exit points maybe, but it's not a crystal ball.
No guarantees.
None at all. It should be just one part of your research alongside understanding the fundamentals, the news, the risks we've talked about, and always, always have a risk management strategy. Know what you'll do if the price goes against you.
Sound advice. Okay, let's try and wrap this up. We covered quite a bit.
We did, from Libre tokenizing Telegram bonds, that whole RWA and TradFi connection.
Right. Then Bitcoin's price surge, but tempered by those warnings from Bitwise about deeper economic risks.
Then the big one. The quantum computing threat looming over basically all of crypto security.
Yeah, that's a sobering thought. And finally, the current price snapshot for BTC, ETH, and XRP showing some bullish signs, but with those key support levels needing to hold.
That sums it up. The idea was really to give you, the listener, a clear, concise overview of these significant threads without getting lost in the minute-by-minute market chatter.
So maybe a final thought to leave everyone with. We've touched on institutional adoption, potential economic headwinds, long-term tech threats, short-term price action. Given all these different facets, what does being truly well-informed mean for you in crypto going forward?
That's a great question. It's probably not just about knowing the price.
Right, maybe it's about understanding these different forces, the tech, the finance, the risks, and figuring out which ones matter most to your own perspective or strategy. Perhaps identifying areas from today you want to dig into more.
Exactly. It's an evolving landscape, constantly changing. Staying informed means being curious, looking at it from multiple angles, and understanding the connections.
Well said. And on that note, that wraps up our deep dive for today. Thanks for tuning in.